Good morning, and thank you for joining us. Today is Tuesday, April the 7th, and I am your host for this morning. I'm Diana Chan. I'm the owner-operator of Mogul's Coffee House and Zog's Eatery, and I'm also the chair of the Whistler Chamber of Commerce. I'd like to acknowledge that we are having this virtual meeting today on the shared, unceded traditional territories of the Squamish and Lillooet Nations. We honor their language, culture, land, and traditions. Today's topic is the fifth in our series of the COVID-19 business support. And today we're speaking about the available financial support for business, something that I know we are all very interested in. As some of you have attended other of these series, the purpose of them is so that you, our members, and the broader business community in Whistler have the opportunity to ask the most pressing questions that you have of experts who will provide guidance and support as we navigate these very challenging times. Some housekeeping for this presentation compared to some of the others is our guest has prepared a number of slides with some important information that you can reference throughout the webinar. And what we will be doing is collecting your questions as we go and breaking and asking specific questions to the topic that had been covered in that section. We are going to be using the Zoom Q&A. So if you go down to the Q&A section at the bottom of your screen, you can type in your questions there, as well as you can hit the like button beside a question if you'd like to elevate it to the top of the list. Our team will be monitoring the questions, and as I said, we'd like to address them in each of the particular sections. I'd also like to take this opportunity to thank all of you, our members, for your continued support during this time. It's your memberships, along with the support we get from our partners and the commitments that we have with the community, that is enabling us to do this important work. Today, we are honored to have with us Theresa Walterhouse, partner at BDO and a past chair of this chamber. Theresa has over 23 years experience in general accounting, audit, and tax practice, 20 of those with BDO Canada. Her specialty includes accounting, assurance, and tax advice for owner-managed private businesses, not-for-profits, and real estate, hospitality, and consumer market sectors. She also has a wealth of expertise on tax and accounting services for non-residents of Canada who own real estate or businesses in Canada. Prior to working at BDO, Theresa worked in industry for several years. She held roles in strategic and financial planning and analysis in the retail, wholesale, and food services industry. Theresa is a dedicated volunteer throughout the Whistler and Squamish corridor. She and her staff have volunteered their time at various not-for-profit organizations, and Theresa just completed serving her full 9 years on the board of directors of the Whistler Chamber of Commerce, her last 2 as the chair. Not only has BDO been a partner with the chamber throughout the year, Theresa and her team have spent a significant amount of time to bring this presentation to you today. And with that, Theresa, I'd like to turn the virtual mic over to you.
Thanks, Diana. Thanks everybody for having me here. So I guess, yeah, we'll start to go through a presentation, although I think before getting into the specifics, you know, it's worth noting a couple of things, and you'll see right on the title page here, we've said this information is current as of April 3rd. As I think all of you know who's trying to follow what information is available, the information changes almost daily, and it's continuing to do so. And so I don't know that we have every answer for you today, but I think what we can do is provide an overview, talk about some of the, you know, the issues and questions. And by all means, if you have any other questions, float them up. If they can't be answered today, I believe the chamber intends to circulate answers to the extent they're available. I'd also encourage you to use this opportunity as an advocacy platform. The Canadian Chamber, as well as the BC Chamber and the Whistler Chamber, you know, can take any concerns you have and float them forward to get better results. So, you know, by all means, continue to be active and share the impact on yourself as we go through this, so we can get to the best outcomes for all. So I think on that note, why don't we start? Olivier, if you want to move the slide. So I thought we would go through today is kind of six main areas where we'll talk a little bit about some employer programs, mainly the wage subsidies. There's some employee relief. There are some loan funding programs. And then there's tax deferrals, both kind of GST and income tax related, and just a few other notable provincial deferrals to mention. So why don't we start off with the employer wage subsidies, and Ollie, if you could, perfect, and maybe go to the next slide. Okay, so there are a couple of wage subsidies. The first one was the initial announcement of a 10% subsidy. And that subsidy still exists, even though since this time there's been a second one announced for 75%. The first one, you know, was kind of interesting in that if you're eligible for the subsidy, you could actually reduce it off of employee income tax remittances to CRA, which a lot of employers liked. You didn't have to wait to get paid. You could literally start reducing it as of April 15th. The way it works is it's 10% of wages paid between the period March 18th to June 20th, maximum $1,375 an employee, $25,000 maximum per employer. If you have 2 or 3 companies, say you have 3 restaurants and they're each in a separate corporation, you get the $25,000 for each corporation. So while the amount is not necessarily large, you know, it is useful and immediate. There were some companies, though, that wouldn't be eligible. So if you were foreign owned, as an example, or you are very large and you know, your taxable capital group's 15 million, it didn't apply to you. But overall, it is a program that is still available and is something that you may want to consider. We'll go through the second program, and then we can talk a little bit about the two and whether there's advantages or disadvantages to doing one or the other. Olivier, if you want to go to the next slide. So afterwards, and I think in response to some other countries doing more benefits, and actually the Canadian Chamber with a group of 60 other entities did advocate to increase the wage subsidy significantly. So the government has come out with a 75% wage subsidy. Now, it's important to note that this has not even passed through Parliament yet. I think a draft was sort of circulated today, and there's discussions going on between the various parties. But the idea is that they'll recall Parliament pretty quickly to get something approved. So a few things about this one, 75%, you know, versus 10, obviously much larger. This one is more broad-based. It actually applies to all employers unless you're publicly funded by the government. So even a public company, a foreign-owned company can apply. You must show a decline of revenue of 30% or more to be eligible. You have to apply every single month. It is 75% up to somebody's payroll to a cap of a salary of $58,700 a year, which is essentially a cap of $847 per week per employee. No cap per employee, no cap, you know, it's not 25,000, it's on everything. You know, there are some rules, and we'll go into some of them in a bit more detail, but one of them is just, you know, you can't just inflate someone's salary all of a sudden. You know, the idea is that you're trying to base it off of what you were paying people before the crisis occurred. And Olivia, if you go to the next slide, this provides a little bit of context into how this works. So there are actually 3 claim periods that start from March 15th going onward, but they will reference calendar months in order to figure out if you qualify. So the first one, as an example, the claim period is March 15th to April 11th, but it will be based on comparing your revenue from March 2020 for the full calendar month over March 2019 and hitting that 30% decline threshold for that period, and so on. If you go to the next slide, There are a few things to keep in mind, and again, not all the rules are finalized, but they have said that the way it's intended to work is that it's supposed to be revenue from your business carried on in Canada, from arm's length sources, and so it excludes sort of extraordinary items. The idea is that you should be following your normal accounting methods. So, you know, don't think you could just not report the income that you earned for the month of March, April, or May, or change the way you calculate your revenue to fit that 30% criteria. They are going to come out with more information for not-for-profits and charities, so we'll have to stay tuned on that. And there seems to be some recognition that new businesses won't have income from, you know, March and April and May last year. So they've sort of said that maybe comparing to the monthly revenues to a reasonable benchmark would work, but they haven't been too specific. When you apply for the 30%, you'll need to attest to the fact that there is a decline in revenue. So a few things to consider. But again, without seeing the legislation, the devil can be in the details sometimes, and we don't quite have those details yet. Olivia, if you can go to the next slide. So the idea is that similar to the CERB, it should be easy to apply for. Right now, they're looking at the CRA My Business account. You know, it'll take, you know, 6 weeks to get at this stage, 6 weeks for hopefully from when they announced it. And one of the things they do talk about is, you know, I think where the government's in this boat where they're trying to get money out to people in various ways, and they know they can't be too picky about how they get it out there. So on this one, because the dollars are large, they are threatening severe penalties for abuse. We don't know what that looks like, but again, you know, they're trying to, they want Canadians and businesses to do the right thing and only, you know, apply for things that they're truly eligible for. So the subsidy is taxable, as is the 10% subsidy, which makes sense. If you think about it, if you had earned revenue, that would have been taxable. This wage subsidy is almost like a revenue replacement program to help fund the wages. So, Olivier, the next slide. So just a few things with what I'm kind of seeing so far in these rules and some things to think about. You know, they do have limits to for pre-crisis salary amounts. And so there could be some challenges for people who actually own their companies. Some people choose a salary, but some people choose dividends. Some people choose neither and take money out of the company as a tax-free shareholder loan repayment. And if you're in the boat where you're taking dividends and shareholder loan repayment, you know, you may be out of luck on this in order to get your salary covered as part of the 75%. You know, may seem obvious, but your accounting records need to be up to date. And so in order to apply for this monthly, because you're applying for March over March, April over April, May over May, you actually need to be able to show what your revenue is for those months. May be easy if your revenue is zero, but if you are still generating some revenue part-time right now, you'll want to make sure your accounting is up to date. And we mentioned revenue on a consistent basis. And so this is sort of interesting for some businesses. You know, some it should be straightforward. You know, you earn revenue every day, you sell food as an example. But, you know, if you are in a line of business where you have a revenue recognition policy on maybe member dues or, you know, things where you have to amortize revenue over different periods of time, it's really important that there's some consistency there. So you'll want to be very careful about your revenue recognition accounting. They have also said that the revenue needs to be from third parties. And so if you have companies where you are sharing costs and billing revenue between your intercorporate companies, there could be some challenges there on getting eligibility for this. We'll have to see the rules. A couple other things to think about when you're trying to decide whether it's worth, whether financially you can afford, you know, to keep employees and pay the 75 and obtain the 75% subsidy is impact on other expenses. And so one of them is EHT levels. We know in order to pay the employer health tax, your wages, if they're over 500,000, you have to pay. Right now, if you've let any of your staff go, you may have fallen under the 500,000 limit. But I would imagine that the wage subsidies would actually be considered wages in, not the subsidy itself, but you're paying the wages to get the subsidy. So that could factor into your EHT levels. There also seems to be some acknowledgement that an employer doesn't have to pay 100% of the pre-crisis salary. So, you know, all of the communications say that you have to say you're making every effort to pay the additional 25%. That's actually implying that if you were to only pay your employee 75%, and that 75% is covered, you could do that without paying the additional 25%. The particulars of that we haven't seen yet. That'll be hopefully hashed out in the rules. And then, yeah, I guess there's just some things to think about with all of this. I mean, you know, who's better off? Are your employees better off one way or the other? Are you better off as the employer? A 75% wage subsidy is, you know, is generous, but you do now still have to pay your employees now. The subsidy comes later. You still have to remit source deductions from your employee wages at this stage, even though the income comes later. So, you know, there are some trade-offs here that you really need to think through in terms of whether this is the right solution for your business. You can claim both subsidies. So I would imagine when you're claiming the 75%, there might be a form or a question that asks you if you've already received the 10% subsidy. You know, do you go ahead and file for the 10% now? You can start to claim that as early as April 15th. And, you know, there's no right or wrong answer that applies to sort of each, like across the board. It's an individual decision. I would say that if you are not, if you have some cash flow reserves and you think you're more likely to get the 75% subsidy, it might not make sense to complicate it by claiming the 10% subsidy on the April 15th payroll remittance. But if cash is paramount, you might want to go ahead and do that 10% right now and figure out how to make it all balance out later. So I think I'll pause there for a second on the wage subsidies. Diana, do you have any sort of thoughts or questions that you?
Yeah, it's a great place to stop because there's a few questions in here. I think some of them have been answered, but it probably would be safe to reiterate some of it. One technical question: what is arm's length revenue? How is that defined?
Yeah, good question. So if you own two companies, and you are one company is earning revenue from the other company, that would not be at arm's length. If one company owns another company, you know, a parent company has a subsidiary, they would not be dealing with each other at arm's length. Or a company has two subsidiaries, those two subsidiaries would not deal with each other at arm's length. So, you know, it's when you've got that kind of close connection. And I think what they're trying to do there is avoid the opportunity for employers to play with the revenue numbers because the revenue is actually earned from a company you control.
Yeah, so the easiest is sort of any revenue earned from a third party.
Any revenue you earn for a third party should be completely fine. Yeah. And then we'll have to see how they intend to deal with the arm's length, because there are legitimate situations where, and I shouldn't use the word legitimate, but you know, you might have all employees paid by one company and they provide services to other companies, you know, and how does that factor in? So.
Well, that's a good lead into the next question, which is if you've got a group of associated businesses, is it going to be, are you able to claim the wage subsidy for each business, unlike say the EHT where they consolidate the payroll? The question being, is each individual business considered its own and eligible for the wage subsidy?
Yeah, so far they said yes. So even on the 10% subsidy, where it's a $25,000 per employer, if you've got three companies that are associated together, they each still get their own 25,000. It'll be interesting if there's a way under the 75% subsidy, if there are these non-arm's length issues we talked about, maybe then rather than them exclude it completely, hopefully they'll consider the associated entities so it still works out to be fair, but we'd have to see what that looks like.
There's another one in regards to sort of, I guess, the flow of the cash. So the exact question is, will the wage subsidy be used for source deductions, or must it be paid directly to employees?
Yeah, they're kind of two different things. You pay your employees. So, you know, I mean, technically when you're paying your employees a wage, you're subject to pay them in certain terms. And I'm not sure you can change how you pay your employees. Now, honestly, I'm sure some employees might be totally fine to be a little bit flexible in how they get paid because they might be so happy to get paid. But in reality, they are meant to be two different things. You're supposed to pay your, like if you're paying your employees every 2 weeks, you're supposed to pay your employees every 2 weeks. Separately, the government will pay you the wage subsidy after you apply for it, you're eligible for it, and they're able to make the payment.
Yeah. Okay.
That's the 75% subsidy. Yeah.
There's also, there have been two further questions, and I think you've already addressed them, but really that idea of the owner-operator who has looked at, let's call it the most tax-effective way of paying themselves within the company, be it through a shareholder loan repayment, dividends, that type of thing. And so I just want to, and it's actually right on the screen that we're looking at, is as of right now, the employee wage subsidy does not address those arrangements, and it really is only for salaries, and you cannot start paying. So this is the question is, can you start paying yourself now a salary and claim the wage subsidy?
Yeah, you know, so far the feeling is that you can't. And it would be interesting to see the rules. You know, I'd be kind of inclined to backdate myself a salary and I'd go back a few months. So it's not like I did it to March 1, but you know, I think you have to be really careful because they have this extreme penalty warning. And so, you know, I think there's a fine line there between somebody not trying to abuse the system. I mean, to be fair, you know, as an owner manager, you make these decisions, you can change them sometimes from month to month. I have some clients that just pay themselves a bonus every once in a while and don't put themselves on a strict salary. You know, people do different things at different times, but so far, the feeling is that based on what they've communicated so far, that this could be a problem area. But I would also say that if it is, and this is something to advocate for.
Yes.
You know, like in the end of the day, I think that's just what we have to do is there's gaps in almost everything. And that's not to be critical of the programs that are being laid out, but there will be gaps in no matter what they do. And I think everybody has to speak up and do our best to get the gaps filled.
There's one last question on this before we move to the next section. And I think this one is very relevant for our community in the sense that there's a lot of businesses that are not deemed essential and have been closed and have temporarily or permanently laid off their staff. Given the intent of this program, in particular, the wage subsidy, is to keep employees tied to their employer so that when we look at recovery, the employees are there and still connected to the organizations and the businesses. Can the wage subsidy still apply even though you don't have work for your employees, or do they have to be working? So the idea, if you bring employees back on the payroll, pay them, can you still claim the subsidy even though they're not working? Right.
The answer is yes. It's about paying them. So and you and I were chatting about this, Diana, and I think it's twofold reasons why. One is what the government's trying to do is just keep everybody employed, and it's better for the economy if people have money in their pocket. It's better for everybody emotionally. It's better for the employer to secure staff and be able to start up. So they're not making a judgment call as to, you know, if you're paying people and they're only busy 30% of the time because they just don't have enough to do, that's fine. This isn't about, you know, this is a sham because this person's not working and you're paying them. They want people to get paid, and they're going to get paid one way or the other through some other program. So that's not a concern. And then I just lost my train of thought, because I was going to say something else there that I actually thought was going to be very good, and now I've just sort of but no, you don't have to pay them. It might come to me later, and I don't know if there was a part 2 to that.
Well, something tells me this is a very popular question, so we may have time at the end. I know there's other
sorry, I did want to say one other thing. Part of the reason too the government has to be careful is the government also has rules on, you know, safety, right? So health and safety is the other factor. So you can't force an employee to actually work the whole time if it's going to interfere with the health and safety requirements, which is why they also need to why they can't weigh in on what someone's actually doing while you pay them. Does that make sense?
That's a very good point. Yeah, that is a very good point. And I know some businesses have become very creative with how they bring their staff on and giving them time away from work to maintain the safety protocols. I know that there's one question in here, and I think it is important to note that this is all still subject to legislation, and that not all the details are there. So until it's passed, we don't know when businesses are going to be able to apply for this, even though the application timelines have been set out. So that has been covered in the sense of the period of time. And I think the first period ends April 11th, so that the first application to receive the subsidy wouldn't be until after the April 11th pay period.
Right, and you'll want to make sure you've got your March accounting done, because March is a month where you should hopefully still have some revenue, right? And it's interesting they're doing the calendar month of March, because really, I mean, for businesses that are really impacted, they're probably still going to be they're going to meet that 30%, even though they might have had some as normal weeks. But, you know, that would be some advice I have to you is get your March accounting in line so you can apply for this as soon as it's available.
Great. Well, I think that actually closes out the questions that we have right now. So if you want to move on, I know there's a lot of other juicy bits in there for our members.
All right. Oh yeah, there was one other, this is just a really minor thing before we go. Olivia, if you can go to slide 10 before we just switch over to employees. It was just a little thing I thought I would mention, and it's not really large dollars, but you know, one of the things the BC government did was it's actually a tax reduction, not a deferral, of the school tax portion of the property bills on commercial properties. So they would reduce that by 50% for 2020. And so in 2019, I know that was a rate of 3.7 out of 1,000. You would multiply that by assessed value, and then it's half of that. So if you own the building that you operate your business out of, you will see that property tax savings. If you rent from a landlord, your landlord should receive that savings. And so, you know, one of the things you might want to talk to your landlord about is the triple net reduction related to that, and actually getting that relief in July 1 rather than have it amortized over a 12-month amount. So yeah, if we want to flip over to the government support on the employee side of things, and you could carry on to the next slide, Olivier. This one's really easy because there wasn't much information on it. BC is offering a $1,000 one-time payment as an emergency benefit for people who've lost their income due to COVID-19. And basically they've just said if you are eligible for EI or the Canadian Emergency Response Benefit, you get the $1,000, and the applications will be online soon. And that was as of Monday I checked, and they were not online yet. So thank you. So the big one that's kind of hot on the press right now, because people started to apply for it yesterday, is the Canadian Emergency Response Benefit, which is $2,000 a month. up to $2,000 a month for 4 months. It is a taxable benefit, and there is no source deductions on this at the time. So just as a kind of a reminder, and I've got it as a summary later, you know, anyone who gets this will get, you know, potentially $8,000 without any tax withheld, and that maybe some tax that ends up getting paid on this when they file their tax returns for 2020. But the idea is that it's supposed to be simple. We're hearing it's simple to do online based on how many people have got their applications through yesterday. The first time you apply, you have had to not have income in 14 continuous days and have earned $5,000 last year. So the idea is that this is to cover people who either didn't apply for EI before this came out, or might not be eligible for EI because they are, you know, contract workers, self-employed, and it could be that you just have to stay home because you know, your kids, you know, are sick, that kind of thing. Interestingly, on this one, while you have up to 4 months, this is available to October 3rd, and if you've gone online and looked at it, they have similar 4-week periods. There's 7 of them. So the first 3 match the 3 that for that 75 wage subsidy, you know, March 15th to April 11th and so on. So there's actually 7 periods. So one thing to keep in mind is that, you know, maybe you're employing someone right now. They don't have to worry about losing out on this response benefit if you're keeping them working right now. You know, they could actually continue to work for someone and then apply for this in the next 4 periods if necessary. So it's not something that people have to latch onto immediately if they do have work. Do you mind moving this slide? And then there, you know, this might be coming a little bit more clear now that we're here. But there were sort of quite a few questions before over how this interplayed with EI. And so you can only receive one or the other, and certainly most people were applying for regular EI because you could not apply for the emergency response benefit until April 6th, which was yesterday. Some people may be moved over automatically to this program. You know, once you're entitled to one, you can move to the other and vice versa. So the good news is you can be covered for a longer period of time as a result, but you cannot, you're not eligible for both of them. And I'm just, bear with me for just a second here. Yeah, and so most people have probably seen this, but you know, you could start this week applying. They were staggered, so they're asking people to split between Monday and Thursday this week based on their birth date, just to kind of manage the number of people who are applying. And yeah, you know, if you want to apply now, but you did have income in the last 14 days, well, just wait till the next period or till the next week and then apply. So this isn't an all or nothing thing. One thing that is a little, I don't find it very clear, but I think we need to remember that this was supposed to be an EI benefit. And so it talks about, you do have to claim every 4 weeks, you have to claim again. And when you're applying the second time, it does say that you didn't have income in the 4 weeks you're applying for. So, you know, it kind of implies that it's almost subsequent, but, you know, I've been sort of in my mind, can someone apply for a 4-week period, then stay off for 4 weeks? Maybe they're working for those 4 weeks and then go back on for 4 weeks and so on. But it's not really clear whether you can do that. And typically in an EI program, it doesn't quite work that way. But it's something to sort of think as this evolves. The Prime Minister did say today that they realize there are gaps in this program, and they do still intend to plug some holes. So I think we need to see where this is going in the upcoming days and weeks. Maybe we'll switch gears to the work sharing program, which is the next slide. And this program's actually been around for quite a while. And so I don't know if anyone on the phone has used it before, but ignoring COVID-19, you know, where an employer was experiencing a temporary reduction in the amount of business activity that they couldn't control, they could have employees work a reduced work schedule over a period of time, and both the employer and the employee would have to agree to this, which essentially meant that the employee is going on EI. They'd be given a special code and number, and basically there's certain parameters. I think it was a maximum of 38 weeks, and there had to be a 10% reduction in business activity. The employees would be working somewhere between 10 to 60% less than what they normally would have worked, and that amount could vary week to week. And the idea was that the employee would go in, and I'm not sure if it was each week, but they would go in and they would get a top up of EI for the difference between what they got paid. You know, so if one week they got paid 20 hours, then the other 20 hours, if they had a 40-hour week before this started, you know, they would get a top up for the other 20 hours. Of course, the maximum EI would apply, you know, so there is a maximum EI of 547 a week, I think it is, in any situation. So, you know, it would still only cover you up to the max. So this program has existed, it still exists. What they've done now is expanded it to 76 weeks. And they've also tried to make it a little bit easier. So on the next slide, Olivier, you know, just sort of acknowledging that to make it fast. I guess under the old program, there was quite a bit of work. Both the employer and employee had to sign off on it. The employer had to have a recovery plan to show that it was temporary. And they've eliminated a lot of that just to make this streamlined and more attractive. So yeah, on the next slide, I thought I would stop there. And again, Diana, I don't know if this is a good time for, you know, questions on these programs.
I think it is, and when we had discussed this is probably one of the areas that our community is looking at, which is the question that you've put right on the screen, is what's better for the employees, what's better for the employer, how do we ensure that there's financial stability in our community, given that many of the businesses are closed. So a lot of employers are looking at, is it better to hire employees back? Or is it better for them to access the CERB, access EI, put in a work sharing program? So yeah, I don't know if you've got anything more on that. When we discussed it, it was really about knowing each situation and knowing the rules and then how to apply it now that we have more information.
Yeah, and I admit I'm still mulling this over because it's a bit complex. The one thing that I like about the work sharing, so one of the issues, and it was actually a client of mine who brought it up, which is the concern over, you know, are we going to be able to find employees? Because if someone didn't apply by April 6th, you know, they're now automatically, you know, into the emergency benefit of $2,000 a month. And even if you applied before April 6th, there was some dates where they felt that they might still move people automatically over to the Canadian emergency benefit. So now you're in a situation where after they apply the first time, they have that 14-day work limit, but then each 4-month interval they apply after that, they can't have any income. So the concern is, can I even find an employee now who will work? And you know, I think that is a valid concern, and it may be having to, rather than have a lot of part-time people, you know, maybe consolidating and giving people enough hours that it's worth their while. That could be part of it. But I also know in the F&B business, not all people want to work. You know, some people are really concerned about the health impacts. And so there are these different factors. And this might actually make the work sharing program more attractive, because the work sharing program, you know, is basically it's not clear whether you're still eligible for the 75% wage subsidy. I do have to say that. We don't know that yet. The 10%, you know, shouldn't be a problem, but the 75% wage subsidy, we don't know. But basically you're keeping people working. You as the employer get the benefit of keeping that staff potentially. They may feel more secure still knowing they have a job, but the work sharing allows you to not have to give them, you know, the full pay, and they get a top up to EI. So I think the work sharing actually does still have some, it's still worthy of some consideration here. But I also think let's see what happens in the next few days with this emergency support program, because if they make the $2,000 a month a little bit more lenient, then it could be easier. Right now, at least on the work sharing, they seem to have simplified, you know, some of the requirements. Before that, it seemed a little overbearing, but you know, and this is the challenge. I've had a couple people ask me, well, should I go back and hire people? And they're trying to, you know, make that decision in order to know about the 75% subsidy when we don't have all the rules yet on the subsidy. And I don't really have an answer to that. I think if it's really obvious to you, you're under 30%, and you don't have some of these risk factors like arm's length revenue, and, you know, some things are really straightforward, it's easier to make those decisions. Some people have just retained staff, and so that's really easy. To me, it's a bigger challenge when you're hiring people back and what to do.
The other question that comes up is for owner operators who would not have qualified for EI. The original, one of the original programs was to cover that group and give them access to the CERB. But the question being now, is it more beneficial to go on the CERB or use the wage subsidy? And I think that could be quite a circular question, and one that we will hold. And as we get more answers, hopefully this week, something that we can post for a reference on the chamber site.
Yeah. The good thing is, I would say, if you're the owner manager and you were paying yourself ahead of time, so we don't have to worry about that rule that it's the pre-crisis wage, I feel like the 75% is better, because I think it gets you to a higher number. And remember, you can pay yourself. You have a little bit more flexibility when you pay yourself. You can pay yourself and lend it back to the company, right? Like you can, do you know what I mean? So if you don't have all the cash to take the money out of your company, you can take it out at a later date. You can't do that with a regular employee, but you can do that with yourself. So my gut is that if you're an owner manager, I'd probably lean towards the 75% subsidy. But
yeah, excellent point. Excellent point. So those are all the questions we have for that section. So if you'd like to move on to more of the financing options.
Okay, great. And I will get my helper Olivier to move the slides there. Excellent, thank you. Maybe we'll go to the next slide. So the emergency business account, this I think has the potential to be a great a benefit to most, although I understand as of today, it's still, you still can't apply yet. You apply for this in your regular bank. The government is providing guaranteed loans to the bank. The idea is just to help people with short-term operating costs. And so you can get up to a $40,000 loan to help pay. It's interest-free for the first year or two, and then you start making payments. If you pay off the whole thing, 75% of whatever you get. So if you get the full 40,000, if you pay off 30,000 by December 31st, 2020, they'll actually forgive 10,000 of the loan. If you don't pay it off by then whatever balance is due accrues interest at 5% and is due by 2025. And so, you know, every business who qualifies for this, in my view, should be applying for it. The only disadvantage or I don't want to say criticism, the gap to me in this is the $50,000 to $1 million criteria. You know, why do you have to pay a salary of $50,000 to apply, you know, to qualify? And why is it limited to, they're clearly trying to target small business, and I understand that, but as we know, you know, you could still have a labor intensive business and be small. So the wage criteria is unfortunate that it's in the 50,000 to $1 million. But if you fit within that boat, you should certainly be applying for this. In addition to that, there's some other loans that the Business Credit Availability Program. And actually, before getting into the details of this, what I do want to say is, you know, I know there is going to be a cash flow session coming up that the Chamber's running as well. But, you know, every business owner right now should be reaching out to their own bank that they have a relationship with. And if you need a loan, you should be trying to borrow the money first with your own bank. You know, if you've already got existing loans, you should be talking to them about postponing payments. If you lease something, you should be asking your lessor if they're willing to give you, you know, some breaks. And so, you know, I don't want to suggest that you have to go into one of these programs. You know, go with what's easy and accessible first. But that said, what the government is doing is trying to provide some other loan mechanisms for businesses. And the Business Credit Availability Program is one of them. And there's two components to it. One is working capital loans. And again, these are meant to cover people for, you know, the kind of like 6 months of short-term cash challenges. And so, you know, if you're an existing BDC client, it's a bit easier, you know, like another bank, they might help postpone certain payments. But if not, you need to apply as somebody, as a new business. Olivia, if you could flip the slide. And so, you know, what they're doing, and maybe I'll even have you go to one slide more, the next slide. Yeah, so the loans can range from 100,000 to 2 million. The rates are very low, and they're 36 terms. And so the idea is that you're only paying part of the principal too for the first part, and there's a balloon payment at the end. So they're trying to really manage the cash. You know, there are guarantees. The challenge with these loans is that there is quite a bit of information that you need to provide to get them. And on the next slide, you know, we start to outline what some of this stuff is. And I spoke to a colleague yesterday. We do have a group in BDO who is involved in government incentives and can help deal with loans. And the feedback we're getting from BDC is that, you know, in order to extend these loans, they actually need to see a good business plan. They need to see, you know, at least a 6-month forecast. They ideally want to see longer because they want to see how businesses plan to recover. But they need to see quite a bit of information. The idea is that you need to help show that these cash flow challenges are due to COVID-19. And so there's a lot to put together here. And for some, you know, for some of our businesses and some of my clients, you know, they have the resources to do this. And for others, this is a bit of a challenge. And the challenge then for BDC is they're trying to, you know, assess all these applications and decide whether people are eligible for the loans, and they're needing some good information to do that. So, you know, in addition to that, I think if we go to the next slide, there are a couple cases where, oh, I thought I had one more slide. Just let me check here. Maybe I didn't actually include it. Oh, I did later on. Okay, yeah. So the other thing, the challenge that they're having with this, and even one of the other loans I'll talk about, is that if you're a startup, you're not eligible. You know, or if your business already had losses the last 2 years, you may not be eligible. So the reality is that these programs are good and well intended, but they're not going to apply to everybody. But if you have been in business for a while, you've had a history of, having financial performance, you should absolutely be exploring these loan programs. And then in addition to that, there is what's on the current slide. It's kind of similar idea where you can get loans. The loans could even be larger. There's these co-lending agreements where it might be 80% your bank and 20% guaranteed by the BDC or EDC. You would still apply through it from your regular bank. So there are some sort of loan guarantees and co-lending agreements where the government's really just trying to get more financing capacity out in the market. So again, the best place to start is with your own bank. Apply for the emergency one, if you need it, but certainly start to have discussions with your bank around these, either this option, and if not, with the BDC directly. But recognize with the BDC, they have a little bit of a backlog and they're going to start with their own clients before, it takes them longer to bring on new clients, right? Before they can start lending to them. So I don't know if you've got any questions on that, Diana. I think the last slide I've covered, what some of the challenges are.
Yes, and I think there's the number one question of, well, when can I apply? And I know as of 9 o'clock this morning, it still wasn't available.
And the emergency loan?
The emergency loan,
yeah.
Yes. And I'll just reiterate something that you said. In all of the programs, the expectation is you go first to your financial institution. And in particular, with the emergency loan, you have to apply through your primary financial institution. And all of the big banks currently have sort of the outline of how the online application will work, just waiting for the system. For those that have their primary banking relationship with a credit union, I know that's one of the areas that the the credit union system is working with the government to ensure that credit union customers also have access, but we don't have any further information on that yet. So really just reiterating what you had already said, but something to keep in mind for sure. There are no other questions on this section, so if we wanted to jump forward.
Yeah, that's great. Yeah, I know the TD actually emailed me. So some of the banks might be reaching out to you directly, to nudge you, to make you aware that you can apply through them. Yeah, Olivia, if you don't mind going through. So the next section, we don't have much time, but I think this part's all pretty quick. The next sort of 3 sections are all really about tax deferrals. And so if you could go a little further, Olivier, into the GST indirect tax. Yeah, that's great. The next slide. So, CRA took a while to come out with whether or not they were going to defer on GST, but eventually they did, which is great because these are immediate payments and immediate cash flow savings. And so, to be clear on GST, they have said that you can defer the payment until June 30th, 2020. It's not a filing extension, although they then came out and said that they wouldn't apply interest and penalties if you've late filed. You can interpret that how you like. I do think it's a good idea to file on time if you can. It helps you be aware of what your obligations are and just better track them. At a BC level, the PST filing and payment has been deferred until September 30th, 2020. And then thought we would just mention that there is maybe some GST options for you to consider. Some of you might be on a quarterly filing frequency. You could speed that up to monthly if you have large refunds expected. Maybe you were involved in a capital improvement project. You might want to consider that. If you think you are having refunds, and that should be the case, even if your revenues almost come to a standstill, file frequently and quickly because you'll get more refunds in the queue. And then this might be an opportunity to just make sure, ask your accountant or bookkeeper, you know, whether there's any risk that you've been missing any of your ITCs. And again, this is also about getting your accounting up to date. You know, sometimes if your accounting's not up to date, you might not have recorded all of your expenses yet, and you might be missing some of those ITCs that'll help reduce your GST. And maybe, Diana, if you're okay, we'll go through all three of these sections first, and then we can do questions, you know, together. So from a federal tax and filing payment deadline perspective, we've got a table here that summarizes what these are. The idea, by the way, is that these things that are deferred are impact more if the payment was going to be after March 18th, you know, and this deadline of June 1st, there's been a delay. So for example, if you were required to pay corporate installments throughout 2019, and you know, your year end was September 30th, 2019, and you owed the final amount owing to CRA by December 31st, 2019, technically you're still going to be exposed to interest on you know, those payments. But any payments that you would have had to pay CRA between this window, those are the ones that are you know, kind of interest free. And then, as you can see here, there are as well tax extensions. You know, individuals now have June 1st. But if you have kids and you want to get the enhanced child benefit, you want to file your tax return, you know, as soon as you can, because that's a requirement to get that added benefit. And then if we go maybe to the next section, I did note some just various provincial deferrals. The next slide would be great. And some people have already heard about the EHT is a big one. The payments that were due March 31st have now all been, the return and the payments till September 30th. 2020 installments are also delayed sometime after September 30th. They've been pretty silent as to what, and they said they would come out with more information later. And when I was on the BC website, just to confirm the exact details of the EHT deferrals, you know, they actually have quite a few other things that they've announced. And I put a few of these things up on the slide. A lot of them without detail. You know, there is a rent supplement that people might be able to get for $500 a month, but they haven't defined what low and moderate income is yet. So I don't know who would apply. I don't think they even intend to have the criteria up on the website until the mid-April. But these are some other, you know, ideas to keep in mind. ICBC, if you're on a monthly payment plan, they will defer 3 months of payments for you. So just some things to consider. And so I will maybe leave it there before I wrap up, Diana. I don't know if you've got any questions on some of these tax payments and deferrals.
No, we don't currently have any questions on that. So if you want to wrap up, we're coming close to the end of the hour, and looks like we won't hold anyone over. Okay, awesome. Well, yeah, I think from just you know, I guess my overall messages on this, and you know, it's maybe sound obvious, cash flow management is key, right? So, and you know, if we have any listeners who weren't managing their cash flow very closely, I'm sure this has been a crash course in trying to figure out how to do that. You know, I would say that make sure if you have concerns that your situation's not being appropriately addressed, raise it with your chamber and make it known so that some advocacy can be done on your behalf. Monitor the programs constantly. The chamber's got good message out there. I will, at the end, there's some information where BDO, we've got really great resources on COVID-19 as well. But things change constantly, so keep in the loop. You know, I've said a few times, keeping your accounting up to date, and I'm not saying that just because I'm an accountant. As you can see, there's lots of things here that rely on accounting, whether it's applying for a loan, whether it's applying for these subsidies, and whether it's just you understanding your own cash flow. You know, I think this is the time you want to make sure you're on top of that. And yeah, a couple of minor things later, you know, just as I said, keep your T1s filed accurate, like quickly if you have other benefits you're applying for. Later on, when we do come out of this and you've got employees, you may want to ask them about
you know, whether they want you to take extra source deductions off of them just so that they can, you know, they're going to have this $8,000 of income without tax on it. So, you know, there's a few other things, but you know, yeah, reach out to your chamber, reach out for help. I don't know if you've got any parting words, Diana.
Well, I think you've summed it up very well. So we appreciate it and appreciate you bringing the resources of BDO to our members and to the broader Whistler business community. It's very much appreciated. I know in addition to visiting the Whistler Chamber site, the information on the BDO site is excellent. So thank you. You've also done a great job of advertising one of our upcoming webinars, which is on cash flow management. And Olivia, I think you have a slide there of what we have coming up. So Shannon Sesko, a serial entrepreneur, CEO, coach, best-selling author, speaker, and a corporate director. She'll be sharing with us her webinar, Map Your Cash from Bottom Up. And it covers this 7-step framework to help businesses prioritize what to do, where to invest time and efforts, and how to build up the longest cash runway so that we can get through this. And I think we've said many times, resilience, tight management, cash, be it through a deferral, be it through subsidies. It's really keeping a handle on all of these pieces, both in the short term and the long term. And we know that our members are looking for a framework to help them with that, and even just to make sure that they've considered all the factors. So keep your eye out on whistlerchamber.com, as well as all the other postings that we do there and the resources that are available. And I just wanted to touch on one thing. There was a lot of information in this presentation that related to employees. And although some of you aren't necessarily able to keep your employees working, please feel free to share this information with them. That is one way to help our community, both resilience-wise, so that you have the relationship with those employees when we look to recover and rebuild our economy, both locally and provincially. So that information is there for you to share as well. And if you have any questions that are coming up for employees, we know that that relationship is also very important. So please send those through to the Chamber as well. And so with that, Theresa, I just want to thank you once again for the wealth of information that you've provided in such a succinct way and in an accessible way that our members can come back and look at that as they're making very critical decisions for their business.
Awesome, I'm happy to. Maybe Olivia, if you don't mind going to just one of the last slides, it's just got my contact information on there. Certainly, if anyone wants to reach out, you know, happy to help. And then on the bdo.ca website, you know, there's a couple things that are good. We have an insight area that we have, you know, just such broad and deep information on a lot of topics that, you know, of our interest. And then specifically for COVID, we've got a COVID update area, and you can actually sign up for updates. So if you want to actually sign up, you can go there and actively look at it. But if you need any help with just some general questions, and BDO can help, you know, deal with financing packages. I, you know, didn't really try to sell that as a service earlier because it's just, you know, I'm really here to share information more so than anything else. But obviously, you know, don't be afraid to talk to your client. You know, I've met with a couple of my clients who they've kind of said, does this make sense for me, and what makes sense, and get some, you know, I realize cash might be tight, but still, you know, recognize that getting advice from time to time might still be the best course of action for your situation.
Thank you, Theresa, and no problem at all plugging your services. I think you've shown that just with this presentation of the advice and your ability to think through the issues that are facing business. And for those of you that have asked the questions, yes, the slides will be shared, so you'll have access to those. Thank you all. I appreciate your time this morning.
Thank you.